Bismillahirrahmanirrahim. What is up, guys? My name is Hassan and welcome back, everyone. I know I have been gone for some time, or at least a few weeks, is because I was actually spending time with the family. In fact, we were actually traveling the world. Even though it's really important that we invest our money, it's also important that we also learn how to spend that money. Sometimes it's worth taking the break to see the world. We were actually in Morocco. We stayed there for like about 9 days, which is part of Northwest Africa. And I'll show you guys some pictures from it. So we visited some of these places that you can see in this image from Morocco. So if you ever guys get a chance, you guys should definitely check this city out. This is actually Blue City. Alright, so now I'm going to take you guys back to my portfolio and my M1 Finance. It is at $13,700 or almost $14,000. And we've been making a killer. The S&P 500 has been up massively since the year started. If we look closely, it's up already. It's only been 3 months. We're almost up 5-6%. Kind of feels like 2021. It was up, and up. Little pullbacks here and there, but so far the year has been looking great, and I can see the trend continuing to go up in the long run, or at least in the next coming month. In the short term, we don't know where it's going to go, but we know that in the long run, our portfolio is going to do well because we are invested into solid companies. For the last 3 months or year to date, I'm up around 6.8%, a little bit higher than the S&P 500, but it's relatively the same. So if we look at it, $800 is in market gain and $57 is in dividends. So a total gain of $857 year to date. And I have a cash balance of $151. So majority of people that I've been watching or following, they're all up because the market is doing well and we should continue to see it do well. Last year, 2022 was a brutal year, but I can see that 2023 will be better. So why is the market up? It's because the Fed raises the interest rate only by 25 basis points. Normally, we're used to seeing 50 basis points, 50 or 75 basis points in interest rate. But the Fed decided that they only want to do 25 basis points, which pushed the market up even higher. So what is this federal funds rate? Which I'm going to show you guys. In the last interest hike a few weeks ago, the Fed increased it by 25 basis points to 4.5 to 4.75. So how does this affect us? This number is very important because the interest rate is like gravity. The interest rate is going up, it pulls down the market, and as the interest rate is going down, it pushes the market up. As Warren Buffett explained it really well, interest rate is like gravity. Everything revolves around it, either pulling or pushing it up. Current interest rate is around, federal funds rate is around 4.5, 4.75, which means that if us individual and try to borrow money, they will charge us a 2% higher from this number. So if we want to buy a house, the current interest rate will be 2% higher than this, so it'll be around 6.5. If the Fed continues to increase this number higher and higher, it'll become harder and harder for us individuals to borrow this money, which will then slow down the economy. So again, this is a very important number. Let's take a look. Historically, in the last 5 years, the federal fund rate is at one of its highest peak. So if you look at it for a 10-year, it's one of the highest. So the Fed is definitely trying to slow down the market to reduce inflation because the Fed only has 2 jobs. One of them is to maintain the inflation, keep it under control. And the second one is to make sure they support maximum employment. That's it. Those are the only 2 jobs they have. Control inflation and making sure people have jobs. Right now, people have jobs. So at least one of the check mark is met out of the 2. So that's why we want to closely, as a Muslim, we want to stay away from interest, but we just want to follow it because the whole world currently runs on this interest. So as a Muslim, we stay away from it as much as possible. I think the Fed will continue to raise interest rate until they bring inflation close to around. If the country cannot control their inflation, it literally destroys the economy of the country. It destroys the country, causes rebellions across the country. So it's really important that we're able to go buy our regular bread and butter without having to pay 2, 3, 4 times the normal price. So let's take you guys back to my portfolio. So currently my portfolio is around 14,000. I have multiple portfolios. So if you guys are looking to check those out in my other videos. So year to date for 1 year, I'm down around 2%. And if we look at it for our all time, I'm up around almost 45%. In other words, almost $3,500 in profit. If you guys look closely, majority of my companies, they all pay a dividend, and dividend investing has worked out really well for me. I'm up around 45%, and according to M1 Finance, and I am satisfied with that. So I do have $151 in buying power. In a bit I will buy something, but let's take you guys into my dividend tracking sheet. I haven't updated in a while. Let's take a look. Let's add the month. So we have June, July, let's add August, let's add September, October, and then let's do November. And you can see here it was added. One thing we can see is the trend line here. And the trend line is up and is continuing to increase. August 21, I received $25.29, which you guys can see my chart has updated. For September 2021, I made $58.05, and then you can see it jumped up way up. And then for October, we made $17.57, and November we made $28.17, which is okay because this is pretty much money I did not have to work for. Every month I'm having these money. My dividends come in $16, $23, $39, $25, $40, $17, $58, $17, $28, and this is money that I'm getting without even having to work for it. So if you guys haven't made one of these charts, make sure you guys do, because it will motivate you guys to continue to invest. I'm not a person who actually talk about investing, I actually do it. So again, my portfolio, $13,000 or almost $14,000. Let's buy a company. Scroll down, let's do energy. We can see I have DVN, only $14. They are at an attractive price. So I'm going to hit buy $100, continue, and then tomorrow morning it will go through. And we can see that here I only have 0.7, so it will buy DVN. Out of the 3, my DVN is underweight. So again, let's go back to my portfolio. We have another $51. You guys can see another $51. Let's make another purchase. Let's go to our healthcare. We have 3. We have Johnson & Johnson, Pfizer, and Merck. So 386. Let's click on this. Let's hit buy. 51.53 cents. Hit continue, and it should go through tomorrow morning. Perfect. So why am I buying DVN? Let's take a look. We went to Seeking Alpha, typed in DVN. We can see right now it's at $56. One of the reasons why I'm buying it is because of their gross profit margin. Currently their gross profit margin is at 60%, which is great. I look for anything that has a profit margin of 50% or higher. Their sector medium is 46, so it's actually higher than my 50%. It's higher than 46%. It's a killer. 60% in profit margin is very good. Even if a catastrophe or a hard time falls onto this company, onto DVN, they have a lot of room in safety in case something goes wrong. They will be able to survive because their profit margin is relatively high. So what is gross profit margin? This value measures the percent of revenue left after paying all the direct production expenses. So meaning pretty much the cost. After paying the cost of the material, this is how much money they have. They still have 60% of it left over. And then if we go down a little bit, net income margin is the net after-tax income expressed in percentage, which is about 32%, which is still a killer. So again, a solid companies. Take a look at DVN. I actually made a stock analysis video. So guys, if you guys made it this, hit the like button, hit the subscribe button. As always, thank you. We'll see you guys next time. Hit the subscribe button, follow my channel. As always, guys, bye everyone. See you guys next time.